Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope everybody had a very good day of trading today. And in today's markets, guys, well, the volatility for the month of January simply continues. We were saying that it was going to be a very volatile month, and so far, it definitely has not disappointed on that front. Today was no different. Even though the indexes largely ended flat, we oscillated between red, green, about 3-4 different times today. If you take a look right here, we started off with a gap up open after some bullish producer inflation numbers came out for some news this morning, and thereafter, the markets kind of had a little bit of a tumble. From top to bottom, the SPY was down 1% at one point today, and then kind of danced around the rest of the day. The QQQs, largely the same picture. Nice gap up open into some immediate consolidation, top to bottom move of about 1.5% before dancing around the lows for the majority of the rest of the afternoon. So the volatility simply continues in the market, and we have a number of different volatility catalysts on the horizon. The biggest one, of course, is going to be tomorrow for the CPI release, first thing 8:30 a.m. tomorrow morning. So in today's video, guys, we are going to take a look at a few things together. Number one, we're going to go over the producer inflation numbers that came out this morning and also take a quick glimpse into the CPI projections for tomorrow and how they may impact the markets. Thereafter, we will take a look at our technical analysis rundown. First, all of our major sectors, and thereafter, some of our big tech names, and see whether or not it's a good opportunity to start buying the dip, or maybe we should be a little bit more cautious and wait. Thereafter, guys, we're going to take a look at my portfolio and a few trades made today. Very good day for us. A lot of the trades we opened yesterday, we were able to close at very decent profits today. So I'll show you where we stand in the portfolio and which trades I am keeping into the remainder of the week. So that being said, should be a fairly shorter video than usual. Let's jump right into the action, shall we? So the SPY up about 0.14%, the Qs down about 0.09, but we did have some good rotation into the rest of the market. Financials had a decent day, semiconductors had a decent day, and the bottom half of the market was truly in the outperformance spotlight. Now, moving into the heat map, as you can see right here, on the one-day relative, big tech was a little bit weak, which is why the market felt a little bit weak overall. But the bottom half of the market was participating today, everybody except for healthcare, namely, but this is very good. However, it can be undone by a hotter than expected CPI release. CPI is obviously going to have an impact on your long-term yields and the bond market as a whole. So all of the interest rate sensitive sectors can be affected tomorrow. Couple that with the fact that we also have a large number of bank earnings that come out tomorrow morning too. JP Morgan, Citigroup, BlackRock, Wells Fargo, Goldman Sachs, and Bank of New York. So that should give us a good indication into, number one, the guidance of the banks for the year, the health of the consumer, and also net interest income guidance, which is going to be front and center, especially in an environment where the Federal Reserve has now only kind of guided towards 2 interest rate cuts rather than 4. So obviously that's going to have an impact on those banks' guidance. So it should be a fairly volatile day. The expected move, as I said, 1% for the SPY tomorrow and 1.2% for the QQQs, which is a combination of the volatility from the CPI release, but also some of those bank earnings. So in terms of the one-day relative performance, guys, big tech was down, but also on the 1 week relative, you can see big tech has been some of the weakest names in the market. After kind of carrying the market as best as they could late December into early January, they are taking a well-deserved breather. The bottom half of the market, however, benefiting from a little bit of rotation, but the bulls definitely have a lot of work to do ahead of them. On the one-day relative, you can see that even better. Very decent market in terms of rotation, but to the downside, of course, communication services and healthcare were some of the loss leaders on the day. On the 1 week, you can see as well, energy, basic materials, and industrial, surprisingly, are leading the pack, and everything else pretty much to the downside. So tomorrow should be a very interesting day in terms of price action. In terms of what we had this morning, guys, well, we had a little bit of producer inflation numbers come in, and they came in below the estimate. So I'll remind you, the estimate was for 3.4% producer price index year over year. It came in at 3.3. So inflation, at least on the producer side, seems to be a little bit more tame. However, I'll remind you, the previous month came in at 3%. So this is still coming in as a hotter read month over month, but it came in under the consensus, which is why the market was kind of so mixed on that data today. Initially, it was good, but then the market quickly kind of tapered back those gains as it is a hotter than expected read in relation to last month. Now, tomorrow, I'm expecting largely the same. CPI kind of in the same boat as well. The previous month is at 2.7%, and the consensus is at 2.9. Now, if we come in at 2.9 or 2.8, something like that, well, that will be good news because it will be lower than the consensus, but it will still show that inflation is on a small little uptrend overall. Take a look here. This is the inflation curve. And as we can see, since the month of September, we have pretty much been slowly grinding higher on inflation. And that has been one of the concerns. And Jerome Powell has said that, yes, they are confident to bring inflation down to the 2% target, but it could be a bumpy road. And this is the definition of a bumpy road. A few reads up, some reads down. So we'll see how tomorrow goes. However, if tomorrow comes in above 2.9, guys, think 3%. If we see another 3% read, something we have not seen for all intents and purposes since the month of June, the markets are not going to like that. The SPY and the QQQ will probably end up big red, talking about maybe 1.5% to the downside. And if ever bank earnings are not well received, that will add some volatility to the downside. So I'm being fairly cautious, which is why I freed up a ton of buying power today. And tomorrow, if the markets do drop, I do believe it will be a good opportunity to go shopping for one very simple reason. The inflation concerns, in my opinion, are largely overblown. Even though we are coming off the bottoms a little bit, we are definitely not skyrocketing to the tune as we were in 2021 and 2022. Additionally, we went over all of these catalysts in the Saturday video. If you haven't checked out the first 15-20 minutes of that video, I would highly recommend it. The pros, the cons of the current market landscape, the volatility catalysts on the horizon, and the conclusions, how I plan to trade around this. The moral of the story essentially is we are at a tale of two narratives right now, and you have to pick the lesser of two evils. The market narrative right now is that Trump's policies will be bringing in a little bit hotter than expected inflation, and also that interest rates will stay higher for longer. However, the economy still stands on a very good footing. So we have a tale of two stories right now. You have to pick between the lesser of two evils, right? Now the fact is, the market narrative is hotter than expected inflation for longer and interest rates a little bit hotter for longer as well, which is synonymous with some speculation by the market that this is going to be the case, right? We don't know for sure whether or not Trump's economic policies will bring in that inflation, and we are also not positive that the Fed will only do 2 interest rate cuts. So the market is trying to price in this renewed volatility. However, it is more of a speculative nature. That is the narrative number one. Narrative number two is that the economy, the underlying economy, as shown by the jobs reports, the manufacturing output, the GDP, everything is still very healthy in the economy overall. So that's why we're kind of torn right now between a short-term speculative narrative that has the market coming down since Jerome Powell, and also our long-term view on the market where we have expanding EPS and a solid economy and a solid jobs market. I am putting more emphasis on the solid economy, the expansion of the market as well. However, that allows us to buy the dip, but it does not save us from the short-term volatility in the markets in relation to the short-term narrative. So in essence, what I'm saying is, I am calling out the market's bluff, but I'm being very cautious in doing so because I fully recognize that we can indeed go lower. So that is your expectations for tomorrow and a little bit of what I'm going to be doing if CPI chooses to drop us through the floor. I will be buying, but I'll be buying slowly and cautiously. Keep in mind, fear and greed index is still overall at a fear read. Market momentum is also at extreme fear. Stock price strength in terms of net new highs versus net new lows on the markets is at extreme fear read, some of the lowest that we've had in the last year's worth of time. And the breadth, we've known that the stock market breadth is a problem, right? How many of these names are participating in the rallies? And it is relatively historically at low levels right now. So all that combined leads us to an atmosphere where there is more fear than greed in the markets right now. It is a decent opportunity to be buying the dips, but we need to be doing so slowly and cautiously, understanding that we have many more volatility catalysts on the horizon, not only CPI tomorrow, but retail sales on Thursday for the biggest month of the year, which is December. And thereafter, guys, next week, of course, is the Trump inauguration, and we start the big tech earnings cycle as well. And in 2 weeks' time, we have Jerome Powell potentially delivering us a Federal Reserve pause for the month of January, and the next meeting is only going to be in March. So that is the landscape for right now. Now let's jump right into the technical analysis portion, and we'll kind of run through these quickly because tomorrow's going to change a lot of things, guys, and doing price action before such a big day like tomorrow is not going to provide the best result. So I'll give you the top line expectation and possibly the bottom expectation as well. So this buy is in the context, of course, of this daily downtrend. Today had a nice little bounce with yesterday, but it is only that. It is only a bounce, and we might just be looking for a lower high. So if CPI is bullish tomorrow and we continue bouncing, just remind yourselves where we are. We're in the context of a daily downtrend. We are below the moving averages. We are also in a weekly downtrending cycle as well. So although a bounce can be nice, it can be sold down just as this one was, and just as this one as well. Until we recapture the daily uptrends, I am not confident in saying that this is the lows of the weekly move and that we may just be moving higher towards the all-time highs, so keep that in mind. In the event tomorrow is a bad day for the markets, well, we are going to flush this big support level, 585 down to 575, and we're going to go deeper into the next one, which arguably is 565 to 555. In my opinion, guys, this is probably one of the biggest maximum pain areas for the market. Could result in the S&P top to bottom being down roughly 6 to 9%. That would be the ultimate buy the dip territory in my opinion, because when the S&P comes down below the 26 EMA on the weekly and also the 50 EMA, right in this pocket, usually we tend to get a lot of bullish action. Some of the bullish action should be coming in between the 12 and 26. And it has. The Bulls have been trying to play defense, but if we get the absolute flush, we are coming lower, and that will be a glorious buying opportunity in my opinion. So we will see what happens tomorrow, guys. But as I said, I'm conserving all of my buying power, ready to go buying the dip. And also, do not forget, we still do have the expansion of this head and shoulders pattern, which could take us down below here, 566, into that support. Moving on to the Qs right now. So the Qs also somewhat muted today. Daily downtrend is still in order for these markets. And now we are rejecting from overhead resistance 515 down to about 510. The moving averages are sitting there as well. So if CPI is good tomorrow, bank earnings are good tomorrow, we can see a continuation bounce. But don't feel any FOMO, guys. They sold off this bounce, they sold off this bounce, and they can very easily sell off this bounce because of any single news catalyst that they want. You guys have seen how treacherous these markets have been since Powell. So the last thing you want to do is after a big green day like yesterday, or like after a big green day tomorrow, potentially after CPI, the last thing you want to do is be taking a long here and then just get trapped and sent right back down to lows. So moving on further, in the event we have a flush tomorrow, well, that will just be daily downtrend continuation and continuation of our weekly downtrend as well. The lower end of support, we have a small one here, 500 down to about 494, but the largest one arguably is down here, 485 to 470. In my opinion, if we move down here over the next few weeks, it will be max pain for the QQQs as well. 200-day moving averages down there. We would most likely at that point too be daily oversold, which we are not right now. And in terms of the weekly, we would additionally be between the 26 and the 50 EMA, usually a decent time to start to buy the dip in some of your favorite names. At least it has been since this sell-off in 2023. So please keep that in mind, guys. Very difficult to predict what the markets are going to do tomorrow when we both have CPI and all of these bank earnings. We will just have to wait and see. One thing is for sure, if we have a little bit of a drop, I will be going shopping, and I'll take you through my shopping list a bit later in the video. Into XLF right now, up 1.24%, a little bit of a pre-earnings rally, but do not forget, we are still in the context of a daily downtrend. If you want to erase this daily downtrend, there's two ways to do it. Either you put in a 100% engulfing move, take out 49 and gives the bulls the best chance of resetting into a daily uptrend, or we can do it from here, but we have to protect these lows, 47. As of right now, tomorrow's going to be a very big day for the sector, so it's very difficult to predict what this sector is going to do. I'm just here to say, if you see a big bounce, the bulls have a very good chance of resetting the daily and possibly also recapturing a little bit of the weekly, which is now in a weekly downtrend as well. However, undo this move with poor bank earnings and a negative CPI report, and we are going to flush the level and head for the gap fill from the election, which is going to be 4650, culminating in our lower end of support, 46 down to about 4540. This previous resistance range, support down there as well. This could be the flush zone and maximum pain for XLF. Top to bottom move on XLF, that would be down roughly 10 to 12%, and that has been the extent of the financial sell-offs. At least it has been in the last roughly 2 years of trading. The biggest one, of course, was fall of 2023 when we largely had the same concerns around rates higher for longer and some sticky inflation. So please keep that in mind, guys. Tomorrow, I'm not in the business of predicting what's going to happen, but I will be reacting to the levels. So just be careful in your trades tomorrow morning. If the markets are red, let the volatility come in, let some levels get oversold. 15-minute, 1-hour time frame, and then we can go shopping for a little bit of action. Moving into healthcare right now. So healthcare down about 1.03%, pretty much erasing all the positivity that was coming into the markets yesterday. And we were saying that although this is a very nice daily uptrend, well, we're in the context of this massive weekly downtrend, which is arguably more important. The bounce on the weekly was not so bad. As you can see, a 50% retracement bounce, which is adequate in the grand scheme of things, but it leaves you with a 50-50 probability of the bull's ability to recapture these weekly uptrends by setting a higher low and going for the higher high. So we will see tomorrow. Tomorrow's CPI, of course, going to have the biggest impact on the markets, can very easily undo this daily uptrend. If we come too low towards 136, guys, you're going to lose all the momentum. And I'll remind you at that point, the follow through for the bears towards the lows of 135 will be highly likely. So I'm not going to make any predictions on this sector as well. We are just going to react. Some of the names that I've been looking most closely at are Johnson & Johnson from this location right here for a swing trade, but I'm waiting for CPI and TMO as well. Not too bad of a trade setup too, especially on the longer term time frames. You have a very long-term range of consolidation, and if tomorrow's good and gives the markets a little bit of a boost, could be a decent opportunity to position. Stop loss goes below there, and then we target the all-time highs. Those are two names that may stand to be affected less by the Trump administration policies. Moving into SMH right now. So SMH up about 0.33%, but still, guys, trapped right now. Trapped between overhead resistance 260 down to 250, and also between below support, which is 232 down to 218. The SMH really not doing much of anything for largely the past 3-4 months. The only time this thing will do one of, something actually, will be either closing a weekly candle above 260, which does go to show that the weekly uptrend is back, or we will flush into this lower support zone, 232, 217, which I do believe will bring in a lot of max pain areas for semiconductors, because a lot of names, except for maybe NVIDIA, TSM, AVGO, a lot of names, guys, are at 3, 4, 5-month lows at this point in semiconductors. So the sector remains very mixed, and my trading strategy around the sector has not changed. I am still writing short puts on my favorite names, significantly under the market, willing to buy the dip, not here, but if we get the flush zones down there on individual names such as NVIDIA. Moving on to IWM Russell right now. So the Russell small caps, they did have a nice day today, 1.14%, but CPI is going to be so huge for this index as a whole. Of course, if CPI is negative, well then, yields are going to go up, and the Russell is really not going to like that. But if CPI comes in good and bank earnings come in good as well, I will remind you, the IWM sector weightings, you do have 17% in financial services. So the bank earnings and CPI are going to have a very large impact on the Russell tomorrow. Should be quite a volatile day for this name alone. Now, that being said, we are in the context of a daily downtrend, and any bounces could be just resulting in a lower high, and then it's up to the bulls to prove it to us to recapture the daily uptrend. Until they get the daily uptrend, we cannot say that this weekly consolidation is finished, even though we are coming into support 216 down to 207. So we will see tomorrow how the market responds to this, and I will let you know if I'm interested in any positioning in the event we flush all the way down here, could be coming into daily oversold territory. I will let you know if we come down. My opinion, 210 down to 205 is the next area where I might be interested in positioning. All depends on financial earnings and the results of inflation. Moving lastly into the Dow Jones. The Dow Jones also benefiting from a little bit of a bounce today. Look at these charts, the Dow Jones and the Russell. They look almost identical, although one is known as a more defensive index, the Dow Jones, and the Russell is known as the more aggressive small caps. Why do they look exactly the same? Well, because the sector weightings, guys, are almost exactly the same in terms of financial services, industrials, healthcare, technology. They both largely have the same exposure. They don't hold the same companies, but the sector weightings have been the same. And when your heat map on the last 1 month looks like this, everything pretty much to the downside, that is why those sectors have been somewhat, that's why the Dow Jones and the IWM have been roughly weak. Now, the Dow Jones protecting the lows as best as they can, that 42,000, and right now, still in the context of this daily downtrend, looking for the lower high. Now, if CPI is good tomorrow, we could see more bounce follow through, and I would like to see it follow through to about 43K. That would be 100% engulfing move, gives the bulls the best chance resetting the daily uptrend. but have a bad day tomorrow, both with financials, a lot of financials names in the Dow Jones as well. So keep that in mind. If it's a bad day for CPI and bank earnings, we are flushing and we are dropping a level, and we could head all the way down to 41.2, all the way down to roughly 40,500, right around the 200-day EMA. We have not tested that 200-day EMA since fall of 2023, when we largely had the same concerns: higher inflation and higher for longer interest rates. So keep that in mind. This, in my opinion, would be max pain for the Dow Jones, would be top to bottom drop of about 8 to 10%, which is largely exactly what we did in fall of 2023. So keep that in mind, guys. We can get a lot of very attractive opportunities even if the markets are red tomorrow. So do not be fearful. You should have a shopping list by now, as I've been telling you guys to build. And if the levels of your shopping list get hit, we have to be buying, even if the markets will be bright red. And even though this chart right here may just read extreme fear, that is when you want to be starting to buy. But we have to be very patient with our buys as well, not plowing all the money in at once, guys. We're buying the dips progressively through all these volatility catalysts for the month of January, because there's still a ton on the table for the month. Now, moving into lower, let's take a look at crypto a little bit here. So crypto also just kind of a tale of being trapped between two locations. Bitcoin overhead resistance right now is 101 down to about 98. CPI is going to have a big impact on this one tomorrow, guys. If CPI is red and yields skyrocket, well, the risk on trades are not going to like that at all. We could be revisiting the lower end of support down here, 91.5 down to about 87,000. So please keep that in mind. In terms of the daily and weekly, guys, we are, for all intents and purposes, trendless. We are kind of trapped in this wide range of accumulation. Really reminds me of this big range of accumulation that we had back here. Not the same setup, of course, but also keep in mind, we do still have this kind of nasty head and shoulders pattern on this. And I would not say that the pattern is negated just yet. Still a lot of volatility for the month of January, even on the weekly, guys, just a tightening weekly range. Now, we have not broken down below, setting a weekly downtrend, but any moves and closes below 88K would be a weekly downtrend and would show that we are in for a little bit more of monthly consolidation, the bottom end of which, max pain for Bitcoin, in my opinion, is probably the lower end of the 80,000s. So I will be patiently waiting for any dip buying opportunities, but as of right now, staying on the sidelines. I had a Bitcoin trade that we opened at the lows of yesterday, and we closed it arguably at the highs of today. So I am back out, and I am ready for any negative price action to the downside in the event that does occur. And the rest of crypto, well, very simply, guys, it is just going to follow Bitcoin at this point, because Bitcoin dominance is still arguably at the higher end of the levels. We still have not really started to embark on the second leg of a potential altcoin rally. You really need to see Bitcoin dominance start breaking to the downside if you want to see that. Now, moving into our big tech name list, shall we? We'll cover yields and all that tomorrow, guys, because as of right now, they do not matter. With financial earnings tomorrow, and also with the CPI report, guys, the yields are going to move a lot more tomorrow than they ever did today. So that's why I'm kind of skipping over yields, skipping over gold. We'll react to them tomorrow as well. Moving into Apple right now. So Apple, again, down about 0.48%. Big daily downtrend here on Apple, and trying to desperately hold on to this first area of support, which is 236 down to about 230. This is the breakout retest zone for Apple, retesting the 26 EMA. And in the context of things, guys, from the top to the bottom, Apple is down roughly 11%, right? Usually that's about the extent. 15% is how much Apple can drop in any given slide in the markets, right? You can see right here, most of these declines in the past have been anywhere between 10 to 15%. And this pretty much was the one last fall when we were buying the dips on Apple down here. So I am a fan of buying the dips on Apple, but I am patiently waiting for the CPI release tomorrow. And if Apple makes its way somehow into the mid 220s and retest this bottom area of support down here, let's call it roughly 225 down to about 215, and I can find some short puts close to the 50 EMA, that is probably where I'm going to be looking to write some short puts overall. That would be some extensive monthly consolidation and lining up with the 12 EMA on the monthly. I'm not excessively, excited about going shopping for Apple, but I do believe that it will be a nice short-term trade opportunity with daily oversold conditions. Usually when Apple hits daily oversold conditions, it does not stay there for a long time. So I would be looking to put in some bids if we really flush the next few days. for a little bit of a bounce trade. And of course, I will be using short puts to do so. So as a whole, the bulls are protecting this chart. It is still a weekly uptrend. We've given back a little bit. It is a retest, but keep in mind, Apple's valuation is a little bit on the high side right now, and they do have earnings at the end of the month of January. So keep that in mind, guys. Wait for the daily oversold conditions, and then we can make a little bit of a position trade down here in this lower location. And we're only looking for a bounce because it is still a daily downtrend until the bulls recapture the higher high and higher low patterns. Moving on to AMD right now, AMD down about 1.05% as a whole, and AMD just continues to be a little bit weak. In terms of where we are, well, we're currently at the 200 weekly moving average, which has not really been tested since the later stage of 2022. You can see we can go all the way back to 2018, guys. That's the last time it was tested. And top to bottom now at this point, AMD is down roughly 50% from the all-time highs. I still think it's a good buying opportunity, but this company is very polarizing. You either like AMD, you think it's cheap, or you don't like the company at all. I'm not here to convince anybody. I'll just present to you the facts, right? Support stays below 115 down to about 100, and the valuation right now is extremely cheap. The bull thesis for AMD is the fact that they will be expanding their EPS very healthily this year because of the data center ramp of their AI chips, and also expanding revenue as well faster than they've ever done in the last roughly 10 years worth of time. This is supposed to be AMD's NVIDIA moment. We're not saying they're going to catch NVIDIA. We're not saying they're going to claim, tremendous amount of market share from NVIDIA, but can they expand on their current business offerings and generate a ton more revenue, free cash flow, profit margins, and EPS? Absolutely, and the average analyst price target is around 173, despite the recent downgrades in the most recent days. So I am a big fan of playing AMD. I have not played it this week because of CPI, but if tomorrow is bad, guys, I will be looking to write some short puts in the mid to low $100 range. That being said, the bears are in full control here. The bulls need to start everything from scratch, need a very nice bounce to reset into a daily uptrend. If we get the flush, a daily downtrend simply continues. It will be arguably daily oversold at that point in time. It will be almost weekly oversold as well. And that is where I really want to buy AMD as a whole. So just keep that in mind for tomorrow, guys. That is for AMD. Moving into Amazon right now. So Amazon also suffering from some declines today, 0.32% to the downside, and Jerome Powell pretty much killed this momentum, right? So daily downtrend is clearly in motion. The below support range is pretty much 215 down to roughly 208. So we will see how the bulls respond to this region if it gets tested tomorrow because of a bad CPI release. If the CPI is good, bank earnings are good, and the markets get a pump, well, just realize, guys, that any move to the upside might just be looking for a lower high, and then it's up to the bulls to prove to us, can they reset to the daily uptrend, something we have not had for over a month of time at this point. In terms of the weekly, you can argue as well. The weekly is in weekly downtrend territory, could be heading into the lower end of support. And on the monthly, guys, this is just the start of possible monthly consolidation. It's been 4 or 5 months of nice rally, may just be heading a little bit lower before resuming the rally higher. So if you ask me, guys, I'll be looking for how we react to this level down there. But one thing's for sure, if we come into the 210 area very aggressively, I will maybe be looking to write some short puts around the $200 range. I really would love to pick some Amazon back up around that $200 mark, and that would be a retest of the 26 EMA. Usually that is where some form of big support comes in from the bulls. Obviously, this one came a lot further down than that, but the 26 EMA is usually a good opportunity to start buying the dip on companies. And top to bottom, from that point, Amazon would be down roughly 12%. So a very nice discount. I will be patiently waiting for it. Amazon's going to have a great year, in my opinion, but the start with the month of January being very volatile could be a little bit bumpy. Now moving into Google. So Google also down about 0.64% today. And Google, unfortunately, is now, for all intents and purposes, trendless. We had the daily uptrend going, but you can see the bulls gave it all back, and now we're back into this range of slight support, 191 down to about 188. I say it's very slight support because other than the previous all-time highs, there's really nothing there except for the short-term area we've created since the month of December. The larger area is arguably 180 down to about 175, and that is also the location in which I would really love buying Google. So although we don't have any trend right now, if CPI is bad and we start flushing, that could be interpreted as a new weekly downtrend. As a matter of fact, it would if we flush that 188. Weekly downtrend would be in motion, monthly consolidation would simply continue, and we'd just be looking for a monthly higher low for further trend continuation. So I will be patiently waiting for Google. If we come down here, 181 to 175, I'll be looking to buy the dip on some Google, possibly loading up the leap call options again. and writing some short puts to possibly acquire some shares in that location. That will be a top to bottom decline on Google of roughly between 12 to 13%, retest of the 26 EMA, which is usually always a decent buying opportunity to pick up Google in the context of a bullish market. Moving into Meta right now, Meta down about 2.31% after some news here that they fired pretty much roughly 3,000 employees, 5% of the workforce. Now, this was one of the reasons that Meta was down, but there's kind of a contrarian argument to be made here. They fired these people not because they need to, but because they are seeking to be more and more efficient. So you would think that the market would respond well to this news because this means that Meta's profit margins and free cash flow are going to increase. However, we know the concerns in this market right now are all surrounding the jobs market, right? So when you lose jobs, obviously that's not the best look for the company and could be interpreted in a somewhat negative light. If the company is doing so well, why are they not hiring? Microsoft did the same thing today, hinting at laying off their workforce and stopping hiring people. They are doing this to be more efficient and lean companies, in my opinion, because they hired a little bit too many people in 2020 and 2021, and they've been leading down their businesses for the last 3 years. This is nothing new, guys. These big tech companies have been progressively laying off people for the last 3 years as they seek to get leaner and leaner and more efficient. So I wouldn't read too much into it, but that's one of the reasons Meta was down today. That being said, we did have a daily uptrend going, but we lost all the momentum right now, coming back into support 600 down to 585 roughly. But a bad CPI may just make us take out the lows here, 583. We would lose the daily uptrend and we would immediately be going into some form of a weekly downtrend. If that is the case, you guys know where I want to buy this stock, right? 540 down to 530 is the mark for me. Once again, that would be between the 26 and the 50 EMAs on the weekly, which is what I look for, and would just be synonymous with a little bit of monthly consolidation. You can see Meta has been largely overbought for the last couple of months, so a quick little retest down here into the lower 540, 530s could be providing a glorious buying opportunity, at least in the short term. That will be a top to bottom decline on Meta of roughly 15%, and you can see the pullbacks on Meta have roughly been, over the last year and a bit, 15% top to bottom at the maximum. Even the one from last fall, 2023 rather, not this one that just passed, was also 16%. Usually a good opportunity to buy the dip. So that's where I'm going to be looking to buy the dip on Meta. Fantastic fundamentals, fantastic company, but just overall market weakness and a little bit timid price action. Moving into Microsoft right now. So Microsoft also having some declines today. Right, they have some facts of the day here, but I don't know if I can find it right here, but there you go. Microsoft plans pause of hiring in US consulting unit. So of course that jobs data did not help these companies much today. Microsoft, when that news broke, roughly around the 2:33 p.m. mark right there, you can see it caused a 1% drop in the stock, and traders were quickly able to buy that dip towards the end of the day. Microsoft has been very volatile, contrary to a lot of times in Microsoft's history. This has been one of the more volatile areas. So daily downtrend at this point does simply continue, reacting nicely from the slight area of support down here, 418 down to roughly 410, and the 200 daily moving averages is trying to be maintained by the bulls. One thing for sure though, if we break tomorrow lower with some CPI and head all the way down there, the largest area of support is from the last 1 year of trading, and that'll be roughly between 400 and 390. This is really where I want to go shopping for Microsoft, a little bit heavier than I usually do. That will be a top to bottom decline, guys, similar to the one we had here. Top to bottom decline of roughly 14 all the way down to about 15%. And usually when Microsoft has some bad times in the market, that is usually the extent of the pullback in the context of a bull market. So I'll be heavily looking for Microsoft down there. Arguably the stock, if we do flush down there, will be very close to daily oversold conditions. And similar to Apple, that doesn't happen too often on Microsoft, so I will be looking to buy the dip. The stock has been accumulating sideways for about a year of time while improving its fundamentals. Don't take it from me. We can look at this chart right here and you'll see what I mean. They have been doing nothing but improving their fundamentals, beating every single quarter for the last year. EPS is going in the right direction, and even revenue, beating every single quarter on revenue, and revenue is definitely going in the right direction as well. So when we see a sideways accumulation range for a very high quality company with improving fundamentals, it is usually usually going to break to the bullish upside, unless of course we get some form of recession scenario in the markets. But I am very bullish on Microsoft for 2025, so I want to be positioning as early as possible. Moving into Netflix now, down about 1.41%. The consolidation on Netflix simply continues. We know they had a beautiful rally after their earnings, but it was a little bit too hot after that point. That being said, daily downtrend continuously underway right now, coming into oversold conditions, and if CPI is bad, that may just be the final flush into daily oversold before we get a bounce. But even if we do get a bounce, guys, there's a lot of work for the bulls to do here. You need to have a decent sized bounce and then reset the daily uptrend. As of right now, no sign of that just yet. We'll keep an eye on it though. On the weekly, well, weekly uptrend is clear as day still hunting for a weekly higher low. Yes, this is one single big leg of weekly consolidation, just as this was one big leg of weekly expansion. At this point, anything above 744 still looking for a higher low for possible further trend continuation, but now, top to bottom, we are already down 12% on Netflix. I like to go shopping for Netflix when it's down about 15+% from the all-time highs, and you can see this does happen more regularly than you would expect. It happened once last fall in October, it happened once in the month of April as well, where we were down 14, and fall of 2023 when we had these same interest rate concerns, inflation concerns. You can see top to bottom was actually down 26%. But when it starts to go over 15%, I like to go shopping and kind of lining up with the 26 EMA. If I can find some Netflix down here, 750, I might be tempted for a little bit of a swing trade. But as of now, the short-term bears are indeed in full control. And moving into NVIDIA right now, NVIDIA, same concept, very volatile day for NVIDIA as well. Any trades that were able to be made yesterday for some short puts, I was telling a lot of my members today to close them, and they did and made a decent amount of profit. So congratulations if also you saw my top 5 options list of the week. You were able to write some short puts on NVIDIA in the 120 range and benefited from today's close to close with 60-70% profits in one single day. It was a very nice trading session on NVIDIA. Maybe not so much of a nice close, down about 1.10%. That being said, daily uptrend, suffice to say, is lost, clear as day, right? Loss of the daily uptrend. This one looks like SMH. We are trapped between two levels. No clear direction in sight. 147 down to about 142 is the top end of the resistance range, and below us is some nice support, 129, 130, all the way down to roughly 125. So that being said, I do not mind this area of support, but if I'm looking to shop for NVIDIA, I really want to be buying down here, guys, because if the markets unravel tomorrow with CPI, we know that the bulls have lost essentially their attempt at setting up a weekly uptrend. Almost lost. That would be taking out 126, but the momentum is not looking the best, right? If we get more follow through to the downside, which, let's be honest, guys, would not be surprising in the month of January, it is not NVIDIA's fault. NVIDIA has fantastic fundamentals. The guidance for 2025 is very good. It's just the market is very timid right now, and they're selling off any single rallies in the market, especially a lot of the tech names too, right? So if NVIDIA comes down here, 120 down to 115, I will be going shopping for some shares and potentially even dollar cost averaging into one of my Leap contracts. That will be a top to bottom move of 20 to 25%. And when you take a look at the previous moves down, you can see that usually when you hit 20-25%, even though it can go a little bit lower sometimes, it is usually a very decent buying opportunity for the markets. And that has been the case since April of 2024 as well. When you take a look at last fall, even though it looks tiny, this range right there, it was a pretty big drawdown all the way up to 20%. So that's why 120 to 115 is my preferred zone. We will see what happens, but either way, I am fine, guys. I'll let you know if I have any new positions on NVIDIA. One thing's for sure, a little bit of a down move, guys. I'll be looking to write some short puts for the end of the week, 120 to 115. And now moving into Tesla. So Tesla, not too bad, but give me a very brief moment. And let's dive into it. So Tesla down about 1.72%. Not the worst day for Tesla, but then again, they did give back a lot of the early morning gains. And this is why I say it's going to be a very violent market, guys. Whipsaw moves in either direction. You see how much they popped early morning. Top to bottom, they gave back 6%. So even though it only looks like they're down 2, it was a very volatile move. That being said, the bulls are still trying to get the daily uptrend back. For that, we would need a break above 425. As of right now, we are just kind of consolidating in this range of support, 410 down to roughly 380. I will remind you that is the previous all-time high resistance, which is now support. In the event you lose that, you will be losing a few key things. Well, number one, it will be a perpetual daily downtrend. And number two, unfortunately, it will be a weekly downtrend as well, which could bring us back down into the 360 to 330 range, which we spent a little bit of time in the month of November. So if Tesla does make its move down there after tomorrow, and into the remainder of the week, I will be looking to buy some Tesla down here, guys, below 350. 350 all the way down to 320 is the pocket that I'm eyeing. Personally, we would not maybe be daily oversold, but it would be getting pretty close. That's the closest area of support that we have for a little bit of a bounce, right? Now, moving into Palantir. Palantir up a little bit today, 1.43%, but you can see as well, Palantir gave back a lot of the early morning gains. Palantir was up almost 4%. They kind of gave back just about that, right? About 4% on the day, still up nicely. Actually, they probably up closer to 5. Yeah, they were up 5. They gave back a lot of that, right? So context of Palantir right now is still a daily downtrending pattern, and we do have overhead resistance. The short-term moving averages are there, but this previous horizontal support, which is now resistance, can impact the bull's ability to kind of reclaim these levels, right? So that is 72 down to about $70. We will see if CPI is bullish tomorrow. We will see how we react to it if we pull up into it, and whether or not it's enough to be able to reset this into a new daily uptrend, because as of right now, the bears are indeed in full short-term control. On the weekly, things are not looking as bad as people may think. It is still a very nice weekly uptrend, but this is very healthy weekly consolidation. You can see how overbought we were on the RSI, and now we are just kind of cooling that down. So the next area, in my opinion, that will be tested to the downside will, of course, be this $60 flat. And if we do come into $60, guys, there may be some good opportunities to sell some puts under the market. 55 down to $50 would not be an area that I mind playing Palantir, and could also be resulting in some short-term oversold conditions. So you will take this stock one day at a time, but as of right now, the bears are in clear control. So if we want to be buying the dips, guys, number one, we have to either wait for a large level of support to be basing our trades off of, or we have to wait for a new daily uptrend. Entry goes here, stop loss goes there, then you target the progressive highs. But buying these dips without confirmation of an uptrend is a quick recipe to be catching a falling knife and kind of be getting going underwater in the short term. So please keep that in mind. Be a little bit cautious in the face of all the volatility for the month of January. And lastly, taking a look at SOFI here. SOFI not too bad here, guys. Daily downtrend, yes, is true. Lower high indeed established today, possibly by the bulls. If CPI is negative tomorrow and financials earnings are bad, well, SOFI, even though it is a fintech bank, it is at the end of the day a bank and generates money from net interest income. So the bank earnings tomorrow will give us a glimpse into perhaps SOFI's guidance as well, especially for the main component of SOFI, which still remains net interest income. It's a very big portion of their business. You cannot forget that, right? So that being said, if it is negative for tomorrow, well, we are already in the context of daily downtrends, and we will be looking to maybe flush this low right here, 1363, and head a little bit lower, possibly into the $12 range before we encounter a little bit more support down here at the lower 12s. That being said, on the weekly is also a weekly downtrend right now, and we are just in consolidation mode, similar to Palantir. We were very overbought for a long time, and now the MACD as well is showing signs that it wants to curl over. The maximum pain for SOFI, in my opinion, is somewhere between $12 and $10.50, which is synonymous with the area that I want to be buying this stock. It is literally where we lifted out of before the stock previously started hitting 15s. I'm not saying it's going to go down there. I'm just saying that this, in my opinion, is where max pain probably will lie for the stock. If you want to see continued upside, if CPI and bank earnings are bullish tomorrow, need to take out 1556, put in a nice engulfing move, and reset the daily uptrend. That will show you that weekly consolidation is finished, and then we can talk about a possible rally up to 1650, 17 again. But until the bulls can get this daily uptrend back, the bears still remain in short-term control. I will be looking to buy the dip on SOFI if we make our way into the $12, $11 range to add to the position, because I do believe 2025 should be a very good year for them. That is all the stock market rundown that I figured should be useful for you guys for tomorrow. So take from that what you will. I'm being very cautious. Now let me show you a little bit about the trades that we made today. So before we get into the actual portfolio, I just want to show you some of the trades that we closed. I'm going to start it off with some of the wheel trades. So you guys remember I opened the Palo Alto Networks. I still love Palo Alto Networks in this region. We opened the 162.5s for 94 cents yesterday morning. We closed them today for 55% ROI in one single day. Now, Palo Alto Networks, I really love this level, but I was just de-risking before CPI. Daily oversold, bounce area as well, under the 200-day moving average. Could be a very interesting location for a little bit of a swing trade long. I myself took the risk off the table just because of CPI, but if tomorrow's a bad day for the markets, I probably will be shopping for this trade again, just a little bit of de-risking before a big volatility event. Now, moving on further, we also closed the BITX trade, the Bitcoin trade. After the big flush yesterday morning, we got BITX at $38 strike. We got it for 28 cents, closed it for 8 cents today, 72% profit in one day. Once again, guys, just freeing up some money. If tomorrow's a big red day, I will gladly re-enter this position. And now lastly, we did the same thing for SOXL. SOXL, $22 strike for 16 cents we got on that semiconductor 3 times leveraged product. 16 cents, closed at 5 cents, 68% in one single day. As I wrote down here, I'm willing to reset the SOXL trade again, but I'm just waiting for the volatility catalyst tomorrow. I love this region down here, 25 down to about $22. So in the event we do drop tomorrow, I probably will be putting this one back on. But as of right now, I thought I would just take my profits and kind of walk away with them. We also did a little bit of risk management too for some of the trades that we put on after Jerome Powell. We closed a few trades at a loss, but very small losses to say the least, but losses nonetheless. Moody's Corporation, MCO. So MCO, we had this one for a share swing trade, and we bought it literally right after Jerome Powell here. And I was saying, if we flush these lows, you will be losing the weekly uptrends as a whole, and it will not be that good for MCO. We could possibly revisit the lower levels down here, 440, 430, 415 at the maximum pain levels. I love MCO as a company, guys, but this is exposed to financials, and financials have a lot to lose tomorrow if CPI and also bank earnings are bad. So I'm just being cautious. We did hit the stop loss on Friday, but I said after 2 back-to-back gap down opens on SPY and QQQ, Moody's will probably get a bounce into earnings, but not on the day of earnings. That is anybody's guess. I waited for the bounce. Now we close the position because the stop loss was triggered Friday. I got a little bit ambitious waiting for the bounce with my thesis, and now we close the trade just to de-risk this one. I will revisit this trade at a later time. 469.94 was the entry, 463 on the close, 1.4% loss, guys. Not the biggest deal in the world. $35 loss overall, so not the worst. Berkshire as well. Berkshire, you might remember this trade. We put the Berkshire trade on right after Jerome Powell, as a matter of fact. Here, this candle on Friday, we got in at about 455, and unfortunately, we were looking for the value sector recovery, but it never really happened, right? Most of the value names have not recovered at all. Take a look at, oops, that's not it. Take a look at IVE, not recovered at all since Powell. Take a look at the Dow Jones, which you look at every day, not recovered whatsoever. So, Berkshire as well, same concept. After Friday, it hit our stop loss, breaking the weekly support levels, sending us into a weekly downtrend, which could result in us retesting 430 down to 420. So that's why on Friday, it triggered the stop loss, but similar to Moody's, I said, you know what? I'll wait for a bounce. It's been pretty much oversold the last few days, the SPY and the QQQs. I'll wait for a bounce. I'll take my chances, and right before earnings, I will close. So today, for all intents and purposes, we almost got the high of the day, but I mean, look at the hourly chart, guys. These are all resistance areas, right? So you got to be careful. So I took the risk off the table. Unfortunately, the trade did not work out for us after Powell. The thesis was good. The market just did not move in our favor. So it was a loss. 220 was the entry. $1.30 was the exit. So we did take a decent loss there, but the wins that we had this week have largely offset these losses to begin with. So I'm very happy, guys. Took the risk off the table, both on the wins and the losses were minimized, so I'm quite happy with our performance. Now let's take a look at some of the positions I am keeping for the rest of the week. Well, as you can see here for the portfolio, we did have a nice little green day. It was actually closer to $300, but Interactive Brokers in the after hours, the amount can fluctuate with some overnight trading, but it was a decent day overall. Performance year to date, even though the markets have largely been down, we are still positive as we've been playing defense, as I was telling you guys that I would be playing. But all in all, you can see that most of the wheel trades we are now out of. The only wheel trade that we still have put on for the week at least is this one here, SPLG 68 puts. Those are still in play. That is just the SPY at 68. Would not mind being assigned at all. And the TSLA, which is Tesla 2 times leverage, they are decently in profit already, 14 cents down to 6 cents. So all in all, not a bad day for us. We still have a ton. Look how much buying power we have, guys. full buying power. Now, I know what you guys are thinking. You might see a lot of unrealized losses here, but that's because we closed most of the unrealized gains as well this week. A lot of the gains that we're running, we closed them last Friday, and some of these positions that are down have very long duration time on them in terms of call options and things like that. So here's the list of the portfolio, and yes, I do still have Uber. I still like Uber, my assigned position, and might be rolling covered calls in the future. Uber is very simple, guys. Right? I'm only interested if we start retesting the lower 60 area. It's a tale of being trapped between two levels. Overhead supply, which is 71 down to about 68, and below support 61 down to about $55. So Uber I still like. I will possibly be buying a little bit more. We sold one of the call options last week at the highs of last week, arguably some of the highs of last week, pocketing some very nice profits. I will maybe be looking to buy the dip again on Uber, as I do enjoy the setup, but right now it's kind of just in between two levels. So tomorrow should be a very impactful day. But all in all, guys, the portfolio is looking good. The positions we still have, a couple of them are hedged, and the other ones that we have are very long duration call options, and I have a ton of buying power to buy the dips. So overall, not the worst day in the markets at all, but also not an insane day of performance, but still a green day nevertheless. So that is pretty much everything for today's video. Hopefully you enjoyed. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing too, guys. I'm so close to 5,000 subscribers, and I need your help to get over that big milestone for me. So if you would, please subscribe to the channel. And lastly, if you have any questions, guys, please feel free to ask them in the comment section. I will answer them tonight or tomorrow. And in the event, guys, that you are also interested in the private trading Discord to have access to all of these trades in real time, the link to the Discord is down below. I share all my trades, the short put trades, the leap trades, the call option trades, the put credit spreads, the bull call debit spreads, and everything in between. All of these trades we pretty much do in real time. We also do live streams Monday through Friday for about an hour or two each morning shortly after the open. And also I shared you all of my trade idea setups for the future, and you can ask me all of your questions intraday for any of your stocks and your options that you want a second opinion on. I also share all of my watch list on TradingView, and all of the annotations for all the earnings and stuff like that also are shared when I do share my watch list. So if that is something that interests you, and a whole bunch of other features, which I don't have time to list right now, but if that's something that interests you guys, the link to the Discord is down below. And if you have any questions, of course, on the service, always feel free to ask me in the comment section, and I will gladly reply. That's it for me, guys. Have a good day of trading tomorrow. As I said, if the markets are red, I will be buying the dip, but we're going to be patiently buying the dip, right? I'm not going to spend all the money tomorrow, maybe a quarter, 30% of it. We'll go shopping, but we won't go shopping all at once. So be cautious, be careful out there. Wishing you guys all the best, and I'll see you guys tomorrow after the close. That's it for me, and peace.